All right, welcome everyone to HPT Live Webinar. We are going to be breaking down week ending 3/28/2025. This was an absolute phenomenal week, especially in terms of our strategy, how it presented itself, the win ratio. I had one losing trade that met our strategy's criteria, so we're going to be breaking that down. And it just feels amazing, guys. It really does to have an approach that's extremely repeatable, right? Trading is, it's as hard as you want to make it. And if you can find a way to get in and out of the market with a very repeatable approach, it pulls the thinking right out of it, right? Because every time we think, in quote, this is quote from Mark Douglas, anytime we're thinking, we've already made a mistake, right? All the thinking goes into the back testing. It goes into the data collection. It goes into the review, right? The high level summaries we create, right? That's where the thinking takes place. When we're in an environment where there's not money on the line, where there's not ego on the line, where we don't feel threatened, right? We don't want to be thinking when the market's moving. When price action's generating, all we want to do is be focused on our approach and our strategy, right? So we're going to break down the week. And we're going to talk about execution, right? Execution has literally been our topic for the last couple months now, and it shows. Look at the team. The team's killing it, right? We've never had team members posting profits as much as they are. I've never traded this well. I'm blown away. It's so crazy. I'm so thankful. And it's important, though, to remember where this is coming from, right? If you're doing good, it only serves you to become hyper aware of the behavior that's actually causing you to do well. And that's our strategy. That's our approach. So before we get started, I'm just going to add our pit number indicator so that we don't have to map out each day, and we could kind of just cook through the market here in our trades, right? We're going to do a nice little trade review. So I have on here the pit numbers, which is the previous day high. Let me get rid of some of these lines here. We got previous day low, which is that pink line. We got end of day, and then we got previous day high, right? So how we want to do this is the same every single day, right? I took 2 trades on Monday, 2 longs, and I just want to break down what was going through my mind and why I longed the market when I did. So how it works, right? Very simple approach. We repeat it day in and day out. Now, where I used to fail is I would, hold on real quick. Let me just throw my buddy on mute here real quick. Okay. So where I used to fail big time, gap up, right? We're gapping up a lot this day on Monday, right? What do we look at? We are up, let's see here, $6. So I used to be the type of trader that would assume, oh man, we're gapping up, I got to play short, right? Or, hey, look, we're rallying. We're going up $2.50. When's the seller's going to come in, right? I used to be hyper-focused on the reversal. It's going to reverse. Well, we've changed that paradigm, right? We no longer assume things. Instead, we go, all right, buyers are in control. We're getting a nice bounce right here off the 50 EMA on the 5-minute. We're getting a nice moving average cross. You guys see this too? This is something I'm starting to notice. I want to collect a little bit more data on this. But notice here how we're getting a moving average cross down and then the fake out, right? We're literally getting a moving average cross down and then up, symbolizing sellers getting trapped. They tried and they failed. So now we get a very large push up. Now we're patient because according to the criteria, I cannot enter the market long until I get an RBI. Right? And that's exactly what we did. I stayed patient. I ended up taking the market long around 572.50 and caught a very nice move up here where I just trimmed according to my risk reward. Right? Now, I trimmed my position. I ended up stomping out of my my last contract here. And then the market rallied up and I ended up getting back into the market for another long play. Right here. So guys, once again, you don't need these perfect glamorous moves like we got on Friday. This right here, these 2 trades made me $700. Okay? So once again, and Todd will attest to this, who trades 2-minute time frame futures, you do not need massive moves to make money in the market, right? That's an expectation that ruins more day traders than almost anything else, right? Like assuming you need this glorious move, right? And in reality, literally trading two SPX contracts, I literally pulled $700 from this day. Very simple. I mean, look at this trade. This is literally because we had an upside target up here at 574. So I literally played into it and captured a beautiful move. And that was it. That's literally two positions this day, and I was done. All right. So that was Monday. Once again, simple price action. And that's another thing, right, that I want to talk about. And, you know, guys, we're programmed our whole life to think the more we work, the more money we make, right? Work overtime, you make more money. More work and more effort, you know. In trading, that's not how it works. Less is more. You guys will see this all the time on the Discord. I am a firm believer in one and done. If I get a phenomenal move, I'm most likely done for the day. Unless my edge presents itself, I'm most likely done for the day. Tuesday, I made a mistake, right? I want to talk about this. So Tuesday, we open up. You guys can see this gray line. This is end of day. This blue line is previous day high. And then we have this purple line, which is previous day low. So the market opens up, and we start to sell off. We get that nice moving average cross. And then we come up on this candle and we reject open print, right? Now, I decided to take the market short right here. I had a really good entry, but there was no RBI, there was no GBI here, right? It wasn't our typical three-step approach. Now, is that a mistake? I don't like saying it like that, right? I just want to say if I'm not trading my strategy, I can't expect the 82% win ratio, right? We can't expect the result of a system if we're not going to trade the system properly, right? So I don't want to say it was a bad mistake. This was a great trade. We fell below previous day high. We fell below the 50. We retested open print. We rejected previous day high really well. I got in short, and I caught a dollar move down to end of day. It just wasn't my typical trade. You know, there was a lot of questions about this one. Was this a GBI? Did this actually get disrespected? And I just really want to point out here, it didn't. It did not get disrespected on the next 5-minute candle. It got on the second. This was a great learning opportunity, right? And then market rallied up, and I ended up taking the market long here. Once we got this RBI, right, red bar ignored, went long, and we didn't get the move we were quite looking for. And if you guys remember, contracts were moving relatively slow this day. There was lower volume. I was targeting 577, 51. We didn't get the move that we wanted, and I ended up getting stomped out of this position. And this is what's so beautiful about our approach, right? You guys probably hear me talk about it in YouTube videos a lot, the 50-50 perspective, right? The law of polarity. For every action, there's an equal and opposite reaction. There's hot, there's cold. There's good, there's evil. There's dark, there's light, right? There's up, there's down. There's bullish, there's bearish, right? Like this is the principles that govern the universe. The market's the exact same way. And this is the beauty of having a simple approach, because when it doesn't work going up, that just means you trade it going down. And that's exactly what we did. I entered short here right after this green bar was ignored off open print, using the same criteria as always, capturing a beautiful, beautiful move down here to the lows. This trade felt effortless. And it should. It should feel effortless, right? Like, I know when I see this, the data tells me, the back testing tells me, everything tells me when you get this setup, right? And guys, like if you're new to HPT, you'll hear me say this all the time. Study your entries. Because come Monday morning, this is all the information we're going to have, right? And in a short play here. We need to be able to look at this in front of us and go, okay, this is where I enter short. Why? Well, A, we're getting the moving average cross. We're getting the green bar ignored off open print. Okay. But what else about this trade can we use to help us pull triggers? It's that moving average. That moving average, guys. That moving average, I'm telling you right now, you learn to spot these healthy trends, and you trade with so much more confidence. I don't know if it's because I've dedicated 2 hours a day to on demand, where I'm just constantly trading in and out, right? Like, and hey Josh, this was a healthy trend too. Yeah, you're 100% right. But what keeps us away from chop? What helps us be able to understand if it's going to continue, right? Like, look at this trend right here on the right. Healthy continuation. What happens when we get a little extended? Right? Like right here. When the market looks like this, this might be, I don't know, starting to get a little extended from that blue line right there, right? Maybe we should trim or be ready for a pullback, right? I always use that 9 DEMA as my guideline, whether it's on the 5-minute, the 1 hour, etc., right? That was a beautiful trade. I took 3 trades this day. I usually don't. I don't want to necessarily call this trade a mistake, but in a sense, I felt like I rushed it. I felt like I acted before I was supposed to, and but overall, it was a good day. I felt like I rebounded extremely well here. I was able to capitalize on that nice move down, and then I was done for the day. So that was really, really good day. And then Wednesday, this was flawless. This was beautiful. This was an absolute beautiful trade. I was so proud of the team, and I was so proud of everyone on Wednesday. And it's because it was very uncomfortable, right? Like, look at this. Let's walk through this. So, first of all, look at the pit number. Look how price respects the previous day high right here. It's just flawless. So, let's just do a quick step-by-step here. Market opens up. Josh, this looks kind of bullish, dude. I mean, look. Look at this solid green candle. Honestly, every day I approach the market the exact same way. I go, all right, who's going to show me the approach? It's going to be buyers, going to be sellers. So when I see something like this, yeah, it looks cool. But my system has not presented itself. Therefore, there's no trade. We rally into previous day high and we reject. So at this moment, I'm going, wow, sellers just showed a lot of strength and they bullied through open print. But remember, I don't chase. I will not get in short here. I will not get in short here. I'm not saying that's bad, but it's not my system, and I can't calculate my risk. The best part about our strategy is I always know where to put my stop. Our main purpose as day traders is to manage capital. Making money is inevitable, but managing capital, that's a different story. So I always need to know where to put my risk. So if I get in short right here, where the hell am I putting my risk? Yeah, you could put it up here, you could put it up here, but that's not repeatable. Once again, I want to conserve as much mental energy, fortitude, resources as possible. Therefore, I need my system to present itself, right? I need the GBI. Price sells off, and I get in short right about here, right? Because I like the way we respected the moving averages. And this felt hella uncomfortable, right? Look at this. I'm shorting previous day low right here. This is PDL. And not to mention, we just got this violent move down. Usually violent moves get some sort of snapback into the cloud, whatever, which we did. But so I get in short around 573.64, and my stop loss is above the previous green candle. Price rallies up. And right here I'm like, you know what? It is what it is. I get stomped out, dude. It is what it is. There's nothing you can do to prevent the pullback. There's no way to know, because say you try to find some way to avoid that, it's not going to be a repeatable approach for tomorrow. See, if we're trying to see consistent returns, it's so important to have a consistent approach. It's so important, right? Like, we can't be like, it's just all my inconsistencies came from my inconsistent approach. I have to trade the same approach. I can't think about it. I can't question it. I got to pull the trigger right when I see it. And then I put my stop above the previous candle. And then what happens? Boom. We get this glorious sell-off. Doesn't look like much, but by the end of this candle, I'm literally up 60% ROI trading SPX contracts. It is almost a $1.70 move right here, right? So once again, like, beautiful move right here, just by using our system and staying patient, right? One and done. Done for the day. Done. Computer off. Going and doing other things. Break up with the need to trade. I'm telling you right now, if I had all the money that I gave back, being completely retarded, trying to make more money, because we're always associating more. I could do, like, which is fine if you're in flow state, right? But if you're forcing things, you're trying to get more, you're gonna end up giving more back, guys. So, just learn to walk away. Like, learn to be good. It's fine. Tomorrow, we're going to get the same approach. There's an 88% chance that this strategy is going to present itself. This week at 100%. So, once again, right? Like, it's going to show up. You don't need... And don't get me wrong. There's so much opportunity here. I'm sure, like, we could have continued to kill it. But, I mean, guys, 60 to 80% return. That's phenomenal. That's phenomenal. Literally, 800 was like $670 off this. Like, one SPX contract. So, it was really good. I was really proud of this, though, because if anyone felt as uncomfortable as I did and still pulled the trigger, you did a phenomenal job, right? You trusted the strategy. Now,
hey, Josh,
go ahead, Todd.
Can you talk about your stop loss on that?
Yes. Absolutely. Absolutely.
That's very important for me.
Yeah.
I mean,
Absolutely. That's a phenomenal question. So, basically, when I'm watching this sell-off, the main reason I'm not getting in this is because my main goal is to ride the trend, right? I never want to get in a trade and get stomped out and have it continue in the intended direction, right? Like, I don't want to get in short here and then get, or what would be better, right? Say you just got in short here out of FOMO and then this happened. Boop, stomp you out, right? That means I just completely fumbled the bag. And that's what large monies, the banks, want to happen. They want to steal your positions because there's only so many positions, right? So, for me to get in a trade, I need the RBI or GBI. My stop is going to go directly above it, right? It's going to go directly above it, the previous candle. Now, I'm trading SPX contracts, which means I can't afford a lot of pullback. There's a lot of questions about stop losses, percentage-wise, whatever, right? Is it 30%? In these current volatile market conditions, I'm not going to lie to you, I think on this position, I was draw down around 28% on this right here, because I got in right here, and then it whipped all the way back here. I was willing to let it go to the top of this candle, and that's very important. If that's going to cost me 38%, it's going to cost me that. But that means I need to be willing to let my winner run as well. See, everyone's different. When it comes to stop losses, a lot of people will take profits very quickly on their winning trades, but so they'll only make 20 to 30% tops on their winners, but their losers, they're losing 40, they're losing 50%, which is why they're not consistent. So if you're going to open up your stop a little bit in these market conditions, just remember that means you need to open up your winners as well, right? Your equation needs to be profitable. And then basically what we always talk about is we're risking one candle here to make 2 or 3 or 4 candles. That's why this system works so well. Because technically, if buyers push price above this green candle, the probability of it continuing to the downside just decreased. And on the flip side, the probability of it going up has just increased. Therefore, I do not want to be in the trend anymore. right? So that's kind of the make or break for me. Bearish structure has formed, and as long as sellers hold this level, I'm going to stay in the trade, or until I hit my take profit. So I went short and caught that. The next day also, it's each day, it's pretty much always the same. This day was very similar. I draw down on this day about 20, I think it was 24% on this trade. And it was very similar, right? We got that massive sell off, and now price. Notice, no green bar ignored to the downside, so there's no solid structure, so I do not want to trade it. Notice the pocket here between the candle and the moving average, right? Got that little pocket, and then boom, price snaps up. Once again, I don't want to get in any of this. It doesn't mean I can't make money. Doesn't mean, we can't make it happen. But there's nowhere for me to properly put my stop, right? And just because price is ripping up, that don't mean it's going to not rip back down. I don't know if it's choppy yet, right? I need the market to tell me, to show me, communicate to me that the trend is valid. And that's why our approach is so important. Because if you wait for it, it will tell you everything you need to know. It will tell you that there's a lower chance of chop. It will tell you, hey, this is, it's valid, right? That's why, we trade it. Price rallies up. We rip into end of day. We get a nice red bar right here. Once again, look at the moving average. Taps it. Boom. So I'm in the market long around 56873. Right? Or right at the top. Right when it broke the top. 56883. I'm in long. Now when I enter this long, my stop has to go here. Otherwise, there's a very high chance that you're going to get stomped out early. Right? I put it below this red candle. I always do this. I highlight it like this. Bam. That's me. So now I'm in long. And look what happens. This thing was a massive red candle. If anybody took this, this trade was uncomfortable. It doesn't look like it right here. Right here it goes, oh, yeah, it's a little pullback. No, dude. This candle was a 97-cent pullback. And this trend looked beautiful right here. I was like, oh, this trade's perfect. I'm like, look at this. This thing's going to rip. And then this happens. The test. Right? This right here weeds out more traders than you could ever imagine. Right? This is the test right here. And we got to be ready for it. Right? So that was the long. Notice we get back above the moving average, close above it, hold it, and this thing really took off. This was other than Friday, this was one of my favorite trades this week. It was just beautiful.
Absolutely textbook right there, man.
And risking one to make 1, 2, 3, 4, 5, 6. That is just so beautiful.
No doubt. And to note here on that 10-20 candle, that one where it came down.
Yeah.
You're like, oh, but what makes me remind me of this, we're above the moving averages. That red's fake.
So it's a lie. Yes.
Yeah, it's a lie.
It's a lie. Todd, thank you for saying that. When you're above the moving average, a bearish candle is a damn lie. It's a lie. I don't care. It's a topping tail, Bayesian. I don't care the name. If it's above the moving average trumps everything. It trumps everything. The moving average is made up of all the previous candles. So think about it. The moving average holds more data than a 5-minute candle each and every single time. Beautiful trade. One and done. One and done. It's over, right? There's really no point. I mean, but look, what happened here? This was textbook 2. Off open print. Green bar. Ignored. In short. Stop above. Bam. I mean, I'm so blown away, dude. Because this strategy don't let people say it's got to be complicated, dude. Friday was fucking amazing. Look at this, dude. Friday was the smoothest, calmest, easiest, simplest, just picture perfect playoff open print. I was blown away. My daughter woke up. She didn't want to go to school. I was like, all right, usually when my daughter stays home, it could be, a little more challenging to entertain a 6-year-old and trade. But I initially was going to cancel the live, and then I was like, I have to hop on because this is just too perfect, dude. Price literally falls down below. Once again, let's just run through this. We have end of day right here. Pre-market plan was previous day low and end of day. We're going to communicate to us who is in control. Now, if I get bullish criteria, I target PDH. If I get bearish criteria, I target whatever was my downside target. I think it was like 560 something. What'd we get? Bearish criteria. We got moving average cross. Boom. We got green bar ignored in short right here. I'm risking one candle, and I'm literally, this is by the end of the first candle, I was already up almost 30% on this position trading SPX. So once again, guys, this right here was already like 24% ROI, right? Just in the pre-market low. So and I know futures pay extremely well too. And even if you're just trading SPY contracts, just allow the system to work. We are only as good as our ability to execute the system. The less we think, the better, right? This was beautiful. It was flawless. I had someone ask me the other day. They're like, "How come you don't? How come your pre-market plan or you don't have a bias?" I was like, because I don't want to plan anything. Because the way our minds work is when we plan, we're fixated on it. If you go buy a red car today, you'll notice every red car in the world. If you go buy a purple car, you'll notice every purple car. Your mind has been developed in a way that it looks for what's familiar. So if I marry a bullish pre-market plan, I'll probably go long right here. Or worse, I'll miss this short play and assume, I'll long pre-market low. And then next thing you know, I'm getting chopped up. The last thing I want to do is plan. The only thing I want to do every day is execute this system. Execute, rinse, repeat. Execute, rinse, repeat. And then size up. Execute, rinse, repeat, size up. Execute, rinse, repeat. Collect more data. Build more. Todd, we were talking about last week. If we want to make 100, 200, 300 grand a year in this game, we're going to have to start making $5,000 trades, $10,000 trades. The size is going to have to increase. Now, how do you think you're going to be able to confidently put on that much size? You're going to have to believe in it. Now, I don't know about you, but for me to believe in something, it's got to be, a logical, there needs to be some evidence, right? I mean, obviously, I'm not talking about spiritual or life, right? Because there's other ways to validate, things. But when it comes to trading, I need some damn evidence, bro. I need the facts, okay? I don't care what he says, she says, who says. I need the facts, right? That's why we collect the data. That's why we've been doing this. The more you believe in this, the more confident you're going to trade it, the easier it's going to be to trade it, and the more money you're going to make. It's as simple as that. And this week was just, it was blueprint, Tom.
Got to be robotic with it. It's got to be
effortless, yeah.
Effortless. And that 940 candle, see, I was thinking just like you. This looks like a good long, but I said, that's a big green candle.
Yep.
I cut that thing in half.
Yeah.
And then the bear 180 came through, and I cut that red bar in half, which was halfway was open print.
OP.
And then we got that wick off of it, and it was a wrap after that.
Yeah, bro. And once again, are we extended? No. Are we a healthy trend right here? Healthy trends continue. Trends without gaps, without extensions, without pockets, they continue. It was such a good trade. I was blown away. I think I made 87, maybe 90% ROI on this trade, and the whole thing continued to just sell off. It was so beautiful. And then just like, always remember